A hell of a lot of you who have your own business, either a new business or a mature business, Alpha 2.0 business or otherwise, are actually making a lot less money than you think you're making. And in this video, I'm going to show you exactly how to determine how much money you're actually making and not how much money you think you're making or your bookkeeping system or your accountant is telling you that you're making. I am Caleb Jones as a Sovereign CEO. I help people just like you set up location independent businesses, move to a less bad country, or set up an international backup plan, and do all these things for very little money. I have been in the business world, the entrepreneurial world for most of my life. I started my first business in my early 20s. I went full-time with my first full-time business when I was 24, and I'm almost 50. So we're talking 25, 26, 27 years I've been in this world. And in this world, there are a lot of guys who own small businesses or larger businesses who walk around saying things like, I make $300,000 a year. I make $300,000 a year, or their wives in some cases. My husband makes $350,000 a year. And they don't. They don't. If you actually look at their profit and loss statement, how much money they actually make, they make a fraction of that. Or guys will make, I make a seven-figure income. Or I made $2.6 million last year. Yeah, that's me. Yeah. Woo! And then you actually dig into their finances and you realize that's not what they make. And I'm not even talking about taxes. I'm not talking about what taxes take out of that income. I'm talking about literally pre-tax income. They're not making what they think they make. And many of you who own your own business are in that category. You think you're making X amount because you're reading off some number at the bottom of some report or at the top of some report, more likely, and that's what you think you're making when in fact you aren't. There is a very specific method that you need to use in order to determine how much money you're making. And just going into your QuickBooks or whatever bookkeeping system you use or whatever bookkeeper you use and pressing a few buttons to bring up a profit and loss statement is not enough. That's right. Your profit and loss statement or your balance sheet is not enough to determine how much money you as the owner of the business are actually making. Now, first, we have to deal with the first problem is that many business owners, would-be business owners and real business owners don't even know how to read a profit and loss statement. And it's one of those things where business owners say, well, yeah, I know how to read a profit and loss statement. Of course I do. No, they don't. I can tell you for a fact, as a business consultant with over 20 years of experience, working with hundreds of people who own companies, most business owners don't know how to read a profit and loss statement. I have spoken with guys who have MBAs, who have business degrees, who do not know how to read a profit and loss statement. Not really. They can look at a few basic numbers and kind of get an estimate on things, but they don't really know how to read it and analyze it. So in order to figure out how much money you're actually making, you need to know two things. One, you need to know how to read a profit and loss statement. I will go through some details on the specific key numbers in a moment. That's the first thing. The second thing is that you need to know how to extract from the P&L or from other reports you may have to run for your bookkeeping systems on how to find out how much money you're actually making instead of how much money the P&L or your bookkeeping system or the IRS or your accountant or bookkeeper says that you're making, because those are two different numbers. I will explain in a minute. So there are four key numbers that you need to pull from your bookkeeping system. Some of these are on your profit and loss statements, some of these are not. And once you understand how these four numbers work, then you can determine exactly how much money you actually make from your business. Now, before I get to the four numbers, I'm talking here about pre-tax income. I am not including taxes in this discussion on purpose. That is a separate issue you need to deal with separately. So I'm talking about how much money you make in terms of pre-tax income. You should also track, in my opinion, your after-tax income. That's what I do. I want to know every year how much money in terms of my overall income I'm paying in some form of tax. It's the entire reason, or at least reason number one, that I engaged in the Five Flags international lifestyle to begin with, was to save money on taxes. And so if I'm not tracking that number, how am I going to know if that number is improving? So you want to know your before-tax income and your after-tax income. Topic for another time. Maybe I should do another video on that. I'm happy to do that. Let me know in the comments if you'd like me to do a video on that. But this is how to determine your pre-tax real income. The first key number, and by the way, these are not listed in any particular order. These are all important. Your first key number, and the number that most people focus on, is gross revenue. That is what they call top line income. That is the very top line on your profit and loss statement in most cases that shows the total amount of money coming into your company for any reason whatsoever. Gross revenue is one of the least important numbers on your profit and loss statement. Let me say that again. It's one of the least important numbers in your business financial life. You do not make what the gross revenue says. And the reason for that is you have something called expenses. You have things called cost of goods. You have overhead. These things come out of gross revenue before they go in your pocket. So if you just look at gross revenue and you see this big number, this big fun number, go, woo, I make that. Yeah, it's fine for a little ego boost, but that's not what you make. And I'm in that same category, by the way. When I look at my own profit and loss statements, especially my annual ones, and I see this gigantic figure at the top of the page for gross revenue, I admit I get a little pump up. I'm like, damn, I'm a fucking business badass. Look at that shit. Woo! But that's not how much money I'm making. And I have to immediately remind myself, Caleb, that looks good, but that's not what you're making. You don't make that number. You do not make your gross revenue. And anyone who talks about their income in terms of their gross revenue is either lying or stupid, or in some cases, both. You do not make gross revenue. That is the total amount of money that comes into your business over a particular time frame before any expenses of the business are paid. Now, I know what some of you are going to say. You're going to say, well, wait a minute. I put some of my expenses in my business as a tax strategy. They're not real expenses, Caleb. Correct. I will cover that in a few minutes. You're right. But that still doesn't change what I just said. You're not making your gross revenue. Your business does have some real expenses. And frankly, the bigger that number is and the bigger your business is, the more expenses you're going to have. It's possible if you have a very small business that you run out of your laptop on your kitchen table that makes $22,000 a year, your gross revenue might be very close to what you're actually making. Maybe. Probably not, but maybe. But if you're making real money, certainly if you're making the sovereign CEO minimum of $85,000 a year or more, promise you, that top line number is not what you're making. It is an interesting number to note. It is the starting point of where you determine your real income, but it is not what you make, and it is not even anywhere near the most important number on this list. Matter of fact, it's one of the least important numbers. By the way, there is a political corollary to this. One of the reasons I don't like GDP as a measurement for how well a country is doing economically, because that's what people do. Hey, the GDP of this country over here is up, 8%. Ooh, that's great. The reason I don't like that is it includes government spending. So all you have to do is have a government that starts cranking out more money or borrowing more money or printing more money, and they spend a bunch of new money. It adds to the GDP. GDP is the equivalent of top line gross revenue, which is meaningless. Okay, so it applies not only to business, but also applies to things like politics, geopolitics as well. Top line gross revenue is not the number you want to focus on. The second important number is gross profit. Sometimes people call this gross margin. I'll call it gross profit for the purpose of this video. This is a much more interesting and more accurate number. This is the number that your business, not you, your business has made after cost of goods, COG. Now, what does that mean? Usually in most companies, not all companies, but in most companies, when you make a sale, there are costs attached to that specific sale. For example, if you are a consultant and you sell a consulting contract and you use subcontractors to help you implement the consulting, let's say you have a consulting contract for $20,000, and let's say it's going to cost you $5,000 in paying your contractors to fulfill that contract. Your gross revenue for that deal would be $20,000, but your gross profit is $15,000. $20,000 minus the $5,000 you have to pay for that particular client. Then you have $15,000 in gross profit that now goes into your business, and now you pay business expenses out of that. Make sense? So gross profit is less cost of goods. Cost of goods is the cost of that particular sale. I'll give you one of my examples from my online business. If I sell an online course, there's a cost associated to that, which is the credit card charge. So if you buy an online course from me, I have to pay a 3 or 4% charge that covers the credit card charge, the transaction charge. So let's say, to use easy math, let's say I'm selling a course for $100. I have to pay a $3 fee, credit card fee. So my cost of goods on that sale is $3, and my gross profit is $97 for that sale. It's not 100. Gross revenue is 100. Gross profit is 97. So an entire month of selling online courses and ebooks and things like that, I have a gross revenue number of everything I sold before my cost of goods. Then I have a total cost of goods of all those credit card charges and things like that. Then I have a gross profit figure of what I'm actually making after cost of goods. Gross profit is a much more accurate figure in terms of what you're actually making or your company is actually making. Now, it's still not what you're making. Okay? Gross profit is not your income. It's just a more accurate figure that represents a little more accurately how much revenue your business is bringing in. By the way, if you sell services or information, and to cover that really quick, a business can sell products, services, or information. If you sell services or information, the gross profit figure is much closer to your actual income than if you sell products. Because when you sell products, you have a lot more overhead. Also, if you have an Alpha 2.0 business, your gross profit figure is much closer to your income than if you have a traditional business with a building and 27 employees and an HR department and all this bullshit infrastructure that drives you crazy and makes you work 80 hours a week for the rest of your life, like most business owners. So it depends on the type of business you're in terms of how accurate that gross profit figure is, or at least how close that number is to your actual income. If you want step-by-step instructions on how to set up a high-income, low-work, location-dependent Alpha 2.0 business, you can go to locationibusiness.com. That is my primary flagship course, the Alpha 2.0 business course, that will show you how to design a business step-by-step with very specific instructions, video, everything. Check it out. It's awesome. The third number you need to understand is what's called your taxable net. So what is that? Once you have your gross profit income, that money then goes to pay what? It goes to pay you? No. It goes to pay the expenses of your business, your internet connection, your website fees, your production costs. If you have people working with you, if you have an admin staff, a tech staff, if you pay subcontractors, all the possible expenses of your business come out of your gross profit, right? Right. And so when you're all done paying all those business expenses out of your gross profit, a much smaller number, the number usually at the bottom of your profit and loss, is your taxable net income. That is the amount of money that the IRS, or use your non-American equivalent if you live outside the United States, that your government will use to tax you on. That is the money you take home to yourself, unless you reinvest it back in your business. That's a complicated topic. We'll talk about that another time. Let's assume that you're taking 100% of the income out of the business for your own lifestyle or your own investments. That is the income that you take out of your business. You are taxed on that income in some form or fashion, maybe less if you do 5 flags, more if you don't. And that is the income that the IRS considers as your real taxable income. Now, is that the amount of money you actually make? No, it's not. Per the point I made earlier, one of the biggest advantages of having your own business is that you pay a lot less taxes legally than an employee. And so there are things in your life that you might purchase whether or not you had a business that you can put into your business that become tax deductible expenses. And so these expenses are going to be inside that list of expenses that come out of your gross profit. So what they do is they actually make your taxable net number a little lower than you're actually making. So that means in most cases, at least in many cases, the amount of money your taxable net is actually less than what you actually make. You actually make more than that number. That's kind of nice. So in terms of gross revenue and gross profit, that is not what you make. You make much less than that. But in terms of your taxable net, if you're intelligent, you're smart, and you follow the laws, that number is actually less than what you make. You actually make more than that. Before I get to the big number, the most important number, you need to subscribe to this channel. You should click the notification bell. You should put a like on this video, and you should leave a comment on this video. Doesn't matter what you say. The more interactivity I get on this content and the more algorithm-friendly activity I get on this kind of stuff, the more of this content I will provide for you for free. So if you have any interest in these things, if this is useful to you, subscribe, like, comment, do all the usual stuff. That then brings us to the fourth and most important number in this list, and that is your real net. That is the actual amount of money you are making in your business that you can bring into your life and utilize in your personal life. Now, how do you figure out that number? That number is not on your profit and loss statement. It's not. That is a number you have to figure out manually, or if you're busy, pay a bookkeeper to figure this out for you using Excel or some spreadsheet system. What real net is your taxable net plus the expenses in your business that you've put into your business primarily for tax purposes. So let's say, for an example, let's say your taxable net is, let's use easy numbers. It's $10,000, okay? Hopefully it's more than that. But let's say it's $10,000. That's your taxable net. When you go back up into your expenses, you find that there are several expenses in there, about $3,000 worth for that time period, that you're putting into your business primarily for tax purposes, that you would probably do with or without the business, assuming you made the same amount of money. So let's say it's about $3,000 of those types of expenses. You would then add the $3,000 to your $10,000 and come up with a total real net of $13,000. That's what you actually made. You only paid taxes on $10,000 of it. You didn't pay taxes on $3,000 of it, but you still made the income and you still brought that income into your life. You still benefited from that income by those expenses. For example, here's a real common one. Guys have a small business that did well for the year. At the end of the year, they'll get a frantic call from their accountant and they'll say, hey man, you need to spend more money in your business because you're gonna have a big tax bill. So the guy says, cool. And he goes out and buys a big truck, a really cool big truck for his business, and he makes it into a company car. That would be an example of an expense he is putting into his business that he's putting in his business primarily for tax reasons, not because his business actually needed a new truck. Does that make sense? So he would take his taxable net and add in the expenses of whatever that truck cost him that year and add it to his taxable net for his real income. See how this works? Your real net is what you actually make, not your taxable net. You make more than that. Not your gross revenue or top line income or gross profit. You make less than that. You make your real net, which is not on any report you can bring up on your bookkeeping system unless you have paid a programmer to set up a completely custom bookkeeping system, which I doubt, nor would I recommend. I hope this helps. That is how you determine how much money you're actually making. And a lot of business owners screw this up. Most business owners, in my experience, really don't know what they're actually making. They think, in most cases, they think they make much more than they're actually making because these are top line income and not their real net. If you want more information on how to allocate your monthly finances, you can watch this video right here where I go into detail on how to allocate your monthly expenses and your monthly income. I will see you in the next video. Have fun. Bye.